Welcome to another Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters, and I'm joined again by James Gerrish. James, welcome.
Thanks, Nick.
James, today we want to talk about a few things, and I thought I'd let investors know right at the start of the video what we'll cover. Firstly, just want to talk about the index. Second of all, we want to touch on the telco space because that's all over the news at the moment, and we've been quite active in the portfolio with that. Thirdly, want to talk about Clydesdale, which is one of our more recent acquisitions, and lastly on BHP, given it's in the news at the moment and rallied the other day, had quite a substantial update. So, firstly, just the market. Around that 5.9 mark, we're sort of surging up towards 6,000. We're close to fully invested, as close to fully invested as we sort of get. Where to from here?
Higher, I think, before it goes lower. So the market is en route to 6,000. We hit 59.50 as of the high yesterday. So look, the markets, as we keep saying, April's a really seasonally strong period for the market. The banks are doing well at this point in time, and we're getting some buyers in the mining space. So look, the market goes higher in our view, Nick. Okay, and telco. So this morning, look, bought a little bit of Telstra at 422, and finally got out of Vocus the other day. Focus has gone another 10% down since we sold it, so good getting out of that. I guess ripping the band-aid off, as you'd say. Just wanted to talk about a few things there. First of all, the buy of Telstra. Second of all, TPG. We did mention in a previous video we're moving out of it because there could be a capital raising looming. We've seen that, and it sounds like they're raising a lot of money, potentially paying overs. And also the moving out of Vocus. Just want to touch on those 3 points. All right, so I'll start with what happened or was announced this morning. So TPG, they've bought Spectrum, and they now have the desire to go out there and build their own mobile network. So the first thing and we touched on this a few weeks ago, and that's why we sold our TPG holding at the time. So our concern was that they would go and overpay for Spectrum, and look, without saying that they have overpaid, the reserve price on that spectrum was $860 million. They've gone out and spent, it'll cost them $1.55 billion. So that's, it's the highest price paid for spectrum. It was a really competitive auction. So, for mine, they've probably, they've paid a very, very full price in this regard. They're going to do a $400 million non-renounceable rights issue, one share for every 11 held at $5.25. So, look, what does that do to the share price? It probably, trades sub $6. I like the fact that they're doing a rights issue. I would have liked to see a renounceable rights issue, but I'm glad that that's the structure that they've gone with. But this stock will go below $6, I would imagine, on the open. It did reconfirm earnings guidance, which is a slight positive. But I guess there's broader ramifications around the sector. So Telstra dropped 7% this morning. That's on the back of a new competitor coming into the landscape, building their own mobile network. Optus and Vodafone also bid and bought Spectrum in the auction, so they're expanding their mobile footprint as well. So it's a changing dynamic in the telco space. Okay,
and lastly, just wanted to touch on Vocus. And I guess, further reaffirm the reason why we bought Telstra and touch on Vocus.
Yeah, so I mean, Telstra, we bought it because it's down 7% today, and to us that's a really meaningful lower yields, 7%, fully franked, it's 10%, even with a slight, if there's risk around that dividend. So the big thing you've got to look for in the mobile or telecommunications space at the moment is ARPU, so average revenue per user. That's the number that everyone focuses on. So clearly the landscape has got more competitive. ARPU is going lower, so therefore the telco earnings are going lower. That said, Telstra's got this big war chest, so they can go out there and diversify their earnings stream. That's why we bought Telstra now. Vocus, you mentioned something about being good about Vocus. There's not a lot of positivity in our position in Vocus. It wasn't one of our great ones. We sold it because we see earnings risk in the near term. So, look, it's proven to be the case in the last few days. It's continued to be sold down, and it's a stock that we just needed to rip the band-aid off. And earnings risk for me, I don't want to be holding it with another earnings downgrade, and I think that's a clear risk in Vocus of that happening.
Okay. Next, just want to touch on Clydesdale. Now, we've talked in the reports how it's a European-facing bank, obviously listed on the ASX, used to be joint with NAB. Not really paying much of a dividend. You're not buying that for yield. You know, I guess if you look at the charts, you know, we bought around that 473 mark. Looks like it's had a really good bounce recently, and we're buying it in a bit of an uptrend. Just wanted to, you know, I guess step everyone watching through the rationale from a fundamental and a technical perspective there.
Okay, bigger picture. So looking at what we're trying to get exposure to is Europe. We like exposure to Europe at the moment. We like exposure to the financial space. We think that's got some earnings tailwinds. In terms of Clydesdale, it's cheap. So, you know, Clydesdale trades about 0.8 of book value. So you compare that to an Australian bank, which is, you know, well over 2 times book value. It's cheap. It's cheap for a reason.
Yep.
They've got really high cost base in that business. Cost to income ratio of about 74%. They've guided to take that down to 50%. It does have about 20% of exposure to its earnings in Scotland, so that's a bit of a risk. So look, it's a relative value play, and it's a turnaround play. It's a self-help play. So these guys are putting, you know, they've got a really clear strategy in how they're going to turn around the business. So it's not simply a case of getting exposure to a market that goes up and down. These guys can really turn this business around, and it's highly leveraged to higher interest rates as well.
Okay, so obviously a growth play. Do we have a price target on that one?
Growth play, not a yield play. They will go. They're likely to pay a yield some stage in the next 6 to 12 months. So no, mid-5s would be the initial target. But again, this is going to be a medium-term hold, Nick.
Okay, and the other one, speaking of price targets, had a few questions the other day when BHP had that, you know, 4.96% update on the back. I think it was a US hedge fund that put out a piece on it, and the stock skyrocketed about unlocking the value in BHP. The stock had a bit of a down day yesterday, and I think it's slightly up today. 2 questions, I guess. You know, first of all, what do you think the ramifications of that, and do you think BHP will actually, you know, take some of that on board? And secondly, for the investor that either doesn't have some exposure or, you know, has a bit of lazy capital floating around that wants to buy something, is BHP still a buy here?
Yeah, I think it is still a buy, and we've got a $30 price target on it. You know, the 3 things that the hedge fund was discussing are realistic and they're plausible and whatnot, but they're highly unlikely to happen. So what it does do is refocus the market's attention on the underlying value of BHP's assets. So the 3 things were dissolving the dual listing. That could happen, but it's unlikely to happen given taxation and complexity and cost, etc. It is spinning out the petroleum business, so that could happen, and BHP's got a pretty, you know, a decent track record of spinning out businesses, One Steel, South 32, BlueScope. So they could do that, but BHP are very adamant of their 4 pillars of growth: coal, copper, iron ore and petroleum. So they'd have to step away from that. And the third one is around releasing franking credits. So, you know, that's a conversation they need to have with the Australian government. They're not the only company with a lot of franking credits on their balance sheet. Harvey Norman, Tabcorp, etc. all have these sort of issues that they want to get money back to shareholders. But, you know, the ultimate thing is it'll create conversation. It'll get people focusing, as I said, on the value of the underlying assets. And we think BHP trades higher on the back of it. Okay,
fantastic. Thanks for the thorough update, James. As always, anyone watching out there, feel free to respond to this email to get in touch with us, and we'll answer your question either in email or in the report, or we call you individually. Or you can give us a call on the 1300 number, which is 1300 301 868. It was 1300 301 868. Thanks for watching.